In China, there's a lot going on right now. The medias are warning of a real estate bubble, a Lehman crisis in China, a financial crisis 2.0. It's all about Evergrande, a real estate conglomerate that can trigger a stock market crash. At least the media says so. How realistic is that, and what should you do now? Should you sell your stocks, buy the dips, do nothing at all and keep your cash? That are the questions of today's video. Hi folks, my name is Björn, and in today's video I will talk about Evergrande and give you all the relevant news and updates, and if in my opinion a global market crash will happen or not, and what I will do with my money the next few weeks. So grab some snacks and a coffee and have fun. First, I will talk who and what is Evergrande, what is the trigger for the latest price slide. Will Evergrande trigger a new global financial crisis? Will China bail out Evergrande? What you should do now as a private investor? And last but not least, what I have done with my Chinese stocks and what you should avoid doing. And if you like the video, feel free to give it a thumbs up, as the dang algorithm likes the stuff. But with further ado, let's dig in and have a look who is actually Evergrande. Evergrande is the second biggest real estate developer after Dahlia and Wenda and is based in the tax haven of the Cayman Islands. It is so big that some people are calling them the Chinese Lehman Brothers. Now, this is scaring the markets because I remember back in 2008 when the Lehman Brothers collapsed, it helped trigger the 2008 global financial crisis. And so the internet and media is afraid that if these guys are as big as Lehman Brothers, and maybe their collapse could trigger the next global crisis. So let's talk about real estate just to give us some ideas, because here in the US, home ownership rates are about 65%. But in China, the home ownership rate is over 90%. This is because, same as everywhere else, they think real estate is a good investment. Even if they don't need a home, they buy more because they just simply think the prices go higher and then they can flip it. What happens? If companies like Evergrande are building and people are buying but the demand is not high enough, you got ghost cities like Xi'an and Gangbashi, for example, and many more. But what Evergrande is doing? Well, mainly they develop apartments for people with middle and higher incomes and have 1,300 projects spanning 280 cities, and the way they got there was through debt, because they owe $300 billion, which accounts for roughly 3% of the Chinese national GDP, which doesn't sound like a lot until you know that the real estate makes up about 29% of the total GDP, which is big, folks. But what for me the most alarming is the way how they do their businesses. And if you hear it, you will think I'm nuts, but that is the truth. First, they build and pre-sell expensive homes and apartments at inflated values for maximum profit. The second step, they use the profit they made from the selling very expensive homes that are not even built yet to build even more. After that, they pre-sell the next one and overlay prices values for even more profits, and so on. You get what I'm trying to say, right? But Björn, why it crashed now and not before? Well, good question. Similar to the domestic technology companies, the Communist Party is also tightening the thumb screws on the real estate market right now. The award criteria for real estate loans have been tightened. Apartments are also no longer allowed to be sold before they are completed. But that was part of the Evergrande system. As a result, it became more and more difficult for the group to pay off its debts by selling apartments. And because of that, the core business was apparently no longer profitable enough. The company expanded into areas such as electric cars, mineral water, and baby food. And according to the specialist media, Evergrande is currently trying to sell its recently acquired electric car division, among other things. The soccer team Guangzhou Football Club, which was once called Guangzhou Evergrande, also belongs to the conglomerate. So now the big question, will the CCP bail out Evergrande? My answer is no. I think they will make an example here like they did with the tech companies and the online education sector. And some news or media saying the same, as the Chinese government has now advised its local authorities to prepare for a potential collapse of the country's second largest real estate company, Evergrande. Wall Street Journal reports. According to insiders who are familiar with the problem, this is a clear signal that the Chinese government is not ready to bail out the company with the state money. However, she is preparing for the economic and the social consequences that a collapse of the group would mean. But if Evergrande will collapse, will it provoke a financial crisis? The answer is no, folks. Relax. The danger comes more from the bonds and bank rather than from the stocks. 3/4 of these are in the hands of the company founder Hui Ka-yan, who was named the richest man in Asia by Forbes magazine in 2017 with a net worth of around 45 billion. The remaining shares are also largely in Chinese hands. Among the 10 largest shareholders in Evergrande Group are some Western fund companies such as Vanguard and BlackRock Institutional Trust, but they only hold 0.63 and 0.25% and should be able to go with the collapse. A small share of 0.21% also belongs to the Norwegian Sovereign Wealth Fund. They and BlackRock have recently already reduced their stocks. So why stocks pose little threat to global markets, the bonds outstanding pose a risk, however. The only people who are again the big losers are people they have bought houses and flats that won't be built, and the retail investors. But Björn, what should I do now as a private investor? Well, first and foremost, review your depot and the companies you acquired stocks from, and if the fundamentals of them are still intact. Further, and what I did already since the CCP attacked the tech sector, I slowly decreased and sold my Chinese stocks. Means I sold all my Xiaomi shares with a bit of profit and bought ZEV and PSFE from it. Means for me personally, with all what is going on in China since a couple of months, tech, online education regulation, now Evergrande, plus now Bank of China saying crypto is illegal, the risk is too high for me, and I will only hold my BYD shares and my ETF for the emerging markets. But let me know in the comments below what you will do, as it would be pretty interesting if you will continue to buy Chinese stocks and why. But for the Western market, and especially the crypto market, the next few days and weeks can be really interesting and could be a good opportunity to buy at a huge discount, as we can see already with Ethereum and Bitcoin and Co. So do your analysis as always of the company, and if you are sure that the fundamentals and the outlook are promising and they are now at a discount, you can go ahead and buy step by step by watching the market reaction and increase your positions. And I think my next video could be interesting for you, as I will analyze SoFi and what they do different compared to Square and PayPal. So if you don't want to miss out on that one and my future analysis, consider subscribing. That's it for today. I hope you liked the video. Thanks for watching. Have a great day, and as always, focused and don't get greedy. See you next time.